Hi everyone, and welcome to another episode of Crypto News. Please like, comment, subscribe. Please look at the links below in the video description. And let's continue with the news. So we have finished at this tweet of mine, which talks about the rather major event on Bitmex mainnet. And it's actually reasonable to bring it up just now. And I will show you how it looked like on that day. So essentially, XRP-USD is a new Quanto product from Bitmex. I think Arthur has introduced this product for everyone to short it, and this is this mega long wick going down to 1315. So that was a big event, and if you had a limit buy here and a stop loss here, your stop loss would have executed here, and this is exactly what happened for one guy. So this is just immediately after it happened, someone tweeting a nice ticker, and it's a more than 50% discount for milliseconds. And this is the guy who did that. So he had a limit buy, and then he had a stop loss, which was a last price triggered market sell stop loss. So it's marked the Kenning, or however you pronounced it. And apparently he has a really bad track record. He has lost amazing amounts of money. It looks like he is not particularly familiar with what he should do or what he is doing. That's actually a problem in crypto, because a lot of people got ridiculously rich and they don't understand the ecosystem. They don't understand what to do. They just buy some shitcoins, they go to zero. They buy some contracts which they don't understand, and they lose a lot of money. And this is me moaning about Sicarius, a rather large account which has 60k followers, which was really, really wrong. So in his tweet, he said that this guy has blown his whole BitMax account due to improper risk management. And here he says he's teaching him a trick. Essentially, he said that he got liquidated, but that's actually not true. And Sicarius said something else, but let's just go to my tweets. We'll not go through Sicarius's tweets. So essentially, he said two things. He said that he was liquidated, but he wasn't. And then he says that MEX, which is Bitmex, margin calls trigger a touch early to protect the exchange from slippage. That's absolute bullshit. Bitmex always triggers at a trigger or later. If at any point Bitmex liquidates you at the wrong price, then you can absolutely sue them and get your money back. And while it's difficult to sue an exchange in Seychelles, it's much easier to take a legal action against an exchange in a more regulated country like US, Europe, Malta, places like that. So Bitmex will never trigger early. You'll always see what was your liquidation price. You will see what was the execution price, like what's the bankruptcy price and stuff. So essentially, Mark had a limit buy, and let's just assume that he had a limit buy somewhere around here, and then he had a stop loss maybe just below that. But because there was one single very long wick, his stop got triggered, and every stop that gets triggered at that price will be executed immediately before the market makers manage to repopulate the order book with some new orders. This is why his stop didn't have anything to execute into, and it just executed further down into the wick. So I was going about all this situation. So I said that he, as a traditional risk management, he had a stop loss, which according to the normal school of trading is an appropriate action. However, in crypto, it's a bit more tricky. You need to I believe you have to set your stop loss to the mark price, not to the last price. So crypto is very liquid, particularly on new products like this one. The market makers didn't yet populate all the books. I think by now the market books are pretty well populated. There is a new market maker on XRP USD and on a lot of Bitfinex's markets. You could see that on the big well, there are these websites which show a heat map which demonstrate how many orders are there on each side of the price, and one of them is tensor charts, but there are plenty of them and some of them are free. So it is very cheap to print a long wick like this, especially when the order book is not fully populated, and you can do that easily by mistake. So some are fat fingers, some are stops which are too big for the order book to appropriately absorb, but some are manipulation, and this could have been a manipulation. Potentially this XRP wick could have been a profitable manipulation for someone. Potentially someone could have sold maybe 3 million contracts for XRP USD, like 3 million worth of dollars. So he said, say market sell, let's say going down to $0.14, and he sells up to 10 million. So he sees maybe 2 million in the order book, and he expects that some of them will be hidden orders. So he wants to swipe all the real orders and all the hidden orders as well. So he swipes everything down to $0.14, and then he sets a limit buy at $0.1399, which is for much more than he anticipated to sell. So if he wanted to sell 3 million, let's assume that he wants to buy some more, and doing a very rough math, he could have lost around $500,000 on this sell, just because majority of matches will be near the execution price, near the mark price, and here the order book will be very thin, so the amount of XRP contracts he would be selling here would be very low. So overall it wouldn't be that expensive, but the amount of XRP which he would be able to buy here would be immense, and that ride from here to the mark price would have been very profitable. So that was a very interesting event, and it's a good learning point that if you are operating on a very illiquid exchange, on an illiquid place, illiquid instrument on a big exchange, it's always worth to put a limit order way above and way below what you expect the price to be within the next few days. But remember to always readjust it, because if you forget, then after a few weeks the price might go there and your fill will be unexpected. So that's me banging about that rather curious event. Here, this was the top of the ETH USD March futures premium. At this point, the premium was 40% yearly. In other words, you to buy March futures at this sort of valuation, you would have to pay 40% more if you wanted to hold it for the whole year. So let's assume that you want to hold it for the whole year, and you buy March, then June, then September and December futures. Overall, the premium you pay is 40%, which is massive. And it's not that interesting to buy at this premium, but it's interesting to sell at this premium, because if you manage to sell this future, the March future at 40% yearly premium, and then if you manage to sell that for June, September and December, then you have managed 40% premium on the yearly kind of ETH USD. And let me just silence this. And that's a massive premium. So let's assume that you want to do cash and carry to ARB this, so you can just buy some corn or ETH in this case, and sell the futures, and by buying, let's say, X of ETH and then selling X of these contracts, you will make 40% of 1X. That means, let's for example say you buy a $1,000,000 of ETH, and then you take that ETH to an exchange and you sell 1 million worth of contracts, then you have pretty much no chance of getting liquidated, like almost no chance of getting liquidated, and you make almost risk-free 40% per year. And at the current negative interest rates, 40% yearly is a massive, massive premium. So at the moment, the crypto gamblers are paying a huge price to go long ETH, but actually what I suspect, a large part of these guys are options sellers who are forced to buy there. But there are also some gamblers who are paying that. Imagine if there were if this premium, if the market was more efficient and this premium was arbitraged much better and much quicker. In that case, there would be a lot of entities buying spot ETH and pushing the price up. And the gamblers going long wouldn't be hurting so much in the process of buying this overpriced asset. So the asset would be less overpriced, and they would have more economic potential to keep buying and leveraging up and chasing the price up. So here I was just saying that I'm not crazy enough to short bubbles, and I will not put large amounts of money where my mouth is. But here I thought that we are at the top or near the top of the ETH bubble, and that was 270, almost $1. The bubble went to 286, and I think it might still be going. So we'll see about that. So I expressed my view that it cannot really get much more vertical. This is the chart going back to 2019, like this is August, September 2019. So, it cannot get much more vertical because it's going pretty much in a straight line up. So, it cannot go to the left of the chart or just turn circles here. It just looks like it's going straight up, and it's not really sustainable. That's an interesting post. The US government the intelligence officials are aiming to sponsor a postdoc researcher who would study what would happen if the US dollar lost its status as the world's reserve currency. That's a very interesting thought. They are certainly thinking about it. If they are paying to research this, but this would significantly hurt the US as the kind of world dominant country. This is an interesting development. Huobi, one of the biggest exchanges out there, has launched Huobi BTC on Ethereum. It's good because it will reduce Bitcoin fees when the fees spike again. People will be just sending Huobi Bitcoin around rather than the normal Bitcoin. I think it's positive. These Huobi Bitcoins have much more counterparty risk, which Bitcoin doesn't have. But if you are paying huge amounts for transactions, it's probably good enough. This is an interesting chain of tweets by SPF Alameda. So ZB was it is still an exchange, but he essentially says that it was a real exchange. It is not real anymore. And it's interesting to see his thoughts because he's arbitraging all these exchanges. So now we can tell with huge reliability that this exchange is really dead, and that the real volume has dried up, and everything we see is fake volume and fake orders. I actually remember being interested in ZB exchange because around 2017-18, when the bubble was at the top, they had a very large USDT premium, and I was thinking about using them, but I didn't pull the trigger. Everything was really crazy, and I didn't want to risk the counterparty risk of a shady exchange. I think it's hilarious how SBF called himself in the leaderboard of Bitfinex. So he called himself I-3 Paulo, which means I love Paulo, and that must be because he's getting his withdrawals really quick, and all the issues that he's having with the exchange are being resolved really quick. I think SBF is really close with Bitfinex. He does certainly large amount of volume, as his profit is here 6.8 million. Now it's not real profit. I believe this is just a leg of an arbitrage, and I'm sure he went long Bitfinex and then short somewhere else, and this is how that 7 million has been done. But yeah, it looks like SBF is close with Bitfinex. That's an interesting thought by Glimmery. I think this is quite a clever guy. Crypto is going to create tons of people who have shitloads of dumb money, and these people will be looking for ways to gamble this money away. And it's interesting. What will they use? How will they lose it all? In the past, these were shitcoins. Then it's leveraged derivatives exchanges. What will be next? Difficult to tell. John Brown is another interesting trader, so he certainly does good amount of volume. He is quite a knowledgeable person, and here it's interesting how he tweets about the ratio of stablecoin holdings to claimed 24-hour spot trading volume. So you can see that OKEX is faking volume, and this is not news to me, probably not news to you, while Bitfinex is unlikely to fake volume. Defi, again, behaving as intended. The BZX has been attacked again, so again a speculation exploiting small liquidity and large amount of loans in DeFi. Someone just manipulated the Oracle price and gained 0.65 million in ETH. Nothing to be surprised. Now I looked at YouTube and I was trying to find people who trade BitMax live, and I actually didn't find too many. This is the guy I have found, and it's hilarious because he lasted 2 months and 4 episodes. His account balance at the top of his screen was 4 BTC at the beginning, and then in the last video it was 1, and this only had 4 episodes. So I didn't find anyone trading live on BitMax, and this is why I think that my series with arbitrage is interesting, because I am promising huge gains, and that will just I think it will be just interesting for at least few of you. By looking there, you can get some ideas about arbitrage, you can get some ideas about order execution, and some problems that you might encounter now and then. At the moment, the problem I have encountered is that BitMax has locked a lot of the profits in as the margin, which I cannot really unlock. So at the moment, that account is pretty much gambling, waiting for an opportunity to unlock collateral and open a hedged position again. So at the moment, nothing is happening on that testnet arbitrage account, because not much is going on. And let's move on. Nick Carter, he's a clever guy. I think he talks a little bit too much, so it's taking a lot of time to read everything he tweets, but he does have some gems, and he does have a lot of insight. And it's actually funny when he expected one guy to explain the whole DeFi manipulation, and that guy doesn't understand the manipulation. I thought that was funny. I was expecting some answers from Nick, but here he says he doesn't have answers. This is funny. SBF tweets, will BTC ever get above 10.3k again? Yes, no results. I see what you did there. and has seen how someone got filled for 9 million contracts at 10.3k. So that means that SBF has shorted 9 mil at that level. Now, he has a very large balance and he is allowed to gamble small amounts. So, and also he has large influence over the price. He is capturing inefficiencies in the market, but because he has so many accounts in so many places with so much liquidity, he can manipulate the price short term. That's interesting. I recommend you follow Suzu as well. So China set to mull cash injections, mergers to bail airlines. China is a mess at the moment. This response to the coronavirus has escalated a lot. U.S. Attorney General has considered quitting over Trump's tweets. Person close to him says. Hong Kong should give residents $1.3k to spur demand, KPMG says. So that's like the universal basic income. These are quite desperate measures to keep a country afloat, and these are not sustainable long term, most likely. This is a massive experiment, massive social experiment. This is a tweet about an exchange which has gone under. The exchange is called Fcoin, and this is the map of the transactions. I think they have analyzed the timing as well. And what's really bad about this is that on the 10th of February they made an announcement about burning some of their tokens. Apparently it was an action by one of their employees as a vengeance. And then at some point they made another announcement the following day saying that there is IT system risk and that they wanted 1 or 2 days of maintenance, but at this time they have just emptied the cold wallet. And then the founder said, I have decided to switch tracks, my new project to compensate everyone for their losses. So essentially he is just abandoning the boat. Be wary of small exchanges and new exchanges. They can go down really easily. This is me just talking about my testnet arbitrage account. So that account has doubled in seconds essentially just by entering the arbitrage, but it's also gaining 0.1 BTC just from funding. So I hope that this will be this way for quite a while. The FTX exchange has raised $15 million at 1 billion valuation, and this exchange is only 9 months old. FTX is great, but 1 billion is a lot. It's probably too much, but maybe there will be people who will be willing to give money. So we'll see. Here is me shilling another video. You can find it on YouTube. I'm talking about my video where I talk about the zigzag pattern and how the oscillating movement on BitMax is likely from a market maker, possibly from the internal market making desk, which belongs to BitMax. And by putting large amount of liquidity in front of the order book, once on the buy side, once on the sell side, encourages people to market sell, market buy. So by putting around $1 to $2 million worth of contracts on the sell side, it encourages people to press market sell, and it increases the liquidity. And then after they occupy the sell side long enough and get some fills on their orders, they just move to the buy side and then encourage people to press buy. Kraken Exchange shared a nice chart. So essentially now everyone in crypto is aware of this chart. After a halvening, there is usually a prolonged bull run. Will it be this like that this time? We'll see. Hopefully yes. But it's difficult. My personal thought is that there definitely will be increase in price after halvening. However, will there be another dip before the halvening? There could be, if everyone has taken the lesson learned from these two events. Maybe everyone has leveraged up a little bit too much. There will be one dip which will just cascade some sells. Someone will take advantage, buy at the bottom, so someone can just trigger a chain, an avalanche of stops and liquidations, and then take advantage of that liquidity and just drive the price back up. I would certainly be interested in buying if the price went down before halvening. Here Nick Carter is making fun of Binance, which was pretending to be in Malta, but they actually were not in Malta. So they wanted us to think that they are in Malta, but they really weren't, and the Malta regulators have shared this. And we have finished the tweets, so thank you very much for watching. I will record another video in several days when I gather enough tweets, and I will talk about them again. Please like, comment and subscribe so that you don't miss my new videos. Please have a look at the links below in the description, and see you later.